Okay, my beautiful friends, here we go. It is Sunday, October 9th, 2022. This is, of course, going to be lovely. My newest segment of Markets Look Ahead. Actually, people, look, we got something very interesting from the World Bank. I want to read this to you. This is not me talking. This is the World Bank. They're trying to put together what they believe is going on here. Now, generally, I don't buy any of this stuff. We all know central banks, World Banks, IMF, they never tell you the truth, but once in a while you get little tidbits of information that ring true. And I think, or at least I believe, that people know the truth when they hear it. So we've heard some warnings now from the International Mafia Fund, as I refer them to, warning about liquidity issues, the debt market. Oh no, but ignore that, according to Fed President Waller. He totally dismisses this. I covered this Friday. Fed President Waller said, hey, I don't see any problems at all with regard to the debt market. It's completely fine, absolutely liquid. There's no problem. So ignore everyone. And him, Waller, he's the only one that knows the truth. But we've been getting warning after warning after warning. Now, this is a big one here from the World Bank. Now, just bear with me. I'm going to read this and we're going to break this down. So the World Bank warns, this is kind of interesting, of a fifth wave of a debt crisis. Fifth wave. I never heard about this before, so this is why this is interesting. So keep that in mind with this fifth wave, okay? So debt levels becoming unsustainable, and the world is moving into a recession, okay, being made worse by rising inflation, Okay, I think we all got that. Now, according to the World Bank, there has been already 4 waves of what they're calling a debt accumulation cycle since the 1970s. Each one of these cycles has led to a financial crisis. Now, they're saying we're in one now, so, it doesn't take a rocket scientist to say, hey, look, they're warning that we're in this 5th wave, going to lead to a crisis. There's already cracks in the system. I mean, all the stuff you and I know already. Like I've been explaining, you and I, we're light years ahead of, I would say, 99% of the people who don't understand what's happening. And with regard to the general population, you almost can't blame them because they're being propagandized. You know this. They don't follow alternative media outlets. They don't even want to understand the financial system. They just kind of believe that it's going to work itself out. And obviously what this has led to is a massive abuse of power between central banks here colluding against the global economy, working feverishly to bring the global economy to its knees here via continuing to inflate, destroying the middle class. You know how this works. I've been talking about it since literally time immemorial here. So, when you keep getting warnings like this from the World Bank, from the IMF, from major investment firms, multi-billionaire investors saying, look, we have a problem, from guys like Gregory Mannarino, it's pretty evident. And like I said, people know the truth when they hear it. And I think despite the distractions and the propaganda and the look here, look over there, look here, the game that they always play, people understand what's actually going on here. There are very, very, very few, in fact, almost nobody I talk to says things are great for them. Things are going fantastic for them. They believe the global economy or the economy wherever they live. And I talk to people all over the world. You have to understand, this blog is pretty big. So I interact with people everywhere. And everyone's saying the same things. It's just falling apart. And it's falling apart faster. Here's another narrative I think we're going to start to see. Again, it's always, they sugarcoat things. They try to make things seem better than they are. So we heard last week that food prices are coming down. I don't see that. I shop like all of you do. Now, I don't know where you may live in the world, but I would love to hear from you. Are you starting to see the prices of food come down? Because here where I live, I don't see it at all. I think things are getting, not only are prices continuing to rise, but the size of the products are shrinking. Shrinkflation. So, I don't know what they're trying to pull off here. Again, it's, they try to convince you that what you're seeing with your own eyes isn't true. And I think that's a phenomenon that has played out for many, many years here via the propaganda ministry, the financial channels, the regular news outlets, whatever it is. It's always some kind of thing like that. But I do want to hear from you. Are you seeing food prices fall where you are or rise where you are? Are they staying about the same? Please comment. I will read the comments. I'm trying to get a consensus here. But that narrative that food prices are dropping or even inflation is getting better, I really believe we're going to start to hear more of that. It's not going to be true. Realize the situation that we're in. I've explained to all of you, we've discussed it right here, that since the last financial meltdown here, I guess that was phase 4, according to the World Bank, off of a debt accumulation cycle here, and we're in the 5th wave now. Okay, when that happened here, you had central banks that have gone wild. In order to reinflate a housing bubble, reinflate a stock market bubble, what did they do? They went through this massive debt accumulation phase, okay? I'm not sure how the World Bank is actually quantifying this, all right, but I'm just telling you what I see here. So what did they do? They vastly inflated the global debt. And we're seeing that same thing happen right now with, puppet governments, puppet presidents, finding ways to pull cash into the now via some kind of disease process. Oh, we got to borrow because of that, because we got to stop it. And we got to go into warp speed and develop a vaccine today, and whatever else they got to throw at you in this war that's expanding, and we're throwing hundreds of billions at it. But now it's nuclear Armageddon, according to Mummy Man, and that's going to require who knows how many more hundreds of billions, trillions of dollars here. It falls right into what the World Bank is warning about, and what you and I know already. Again, look, this is common sense to me, and I would be willing to bet that it's common sense to you as well. Look, nobody knows how the financial system works better than you do. Okay, you're not going to learn this in school. No one's going to teach you this. It's stuff you got to see for yourself. You got to experience it, and you got to be able to put it together in your head. What's really going on here? Again, the lie of how rates are too low, and that's the reason why we're seeing global debt balloon here, which cannot be further from the truth. But that distraction there, people are talking about it. I was actually at an event here over the weekend, and I'm listening to people, and they're talking about inflation, and I don't want to get involved at all, but I listen. And people go, oh yeah, the central banks, they're serious. They're serious. They're raising rates. You see what they do? No, it has nothing to do with it. It's a currency issue. People don't get it because they're not being told that. Imagine just for a second, if you had just one mainstream media outlet, I don't know, pick one, Fox Business, come out and they had commentators saying, hey, you know what? Rates are not really the problem. It's a currency free fall. People might wake up. People don't equate one with the other. They don't understand that it's a currency issue because they're not being told that. People have to be told things as if they're children. You understand? And these concepts have to be repeated over and over to them until they get it. But they have no idea. You do. I do. This is a currency issue. And this currency issue, people, let me tell you something right now. All right. It's in its infancy. We can't stop the influx of all of these extra bills that have been created since the last financial crisis by central banks from chasing a lesser amount of goods is what we have today. You got factory activity falling off of a cliff, manufacturing falling off a cliff, less goods are being created. Meanwhile, all these extra bills are chasing a lesser amount of goods. It's economics 101, bam, inflation. That's how it works, okay? But no, it's a rate issue. Remember what's going on here. You got the propaganda ministry telling you to look here. That's the problem. Whenever you see that, you know it's something different, okay? And when you have, let's say, for example, a Fed president, Waller, trying to tell you that the debt market is completely liquid, there are no problems here in the debt market, so ignore the IMF, ignore the World Bank, ignore billion-dollar investors, ignore people like Greg Mannarino, ignore people like yourself that see the problem. We're all wrong. But Waller knows the truth. Waller knows the truth. You gotta be kidding me. Oh, here we go. Here we go. My blood pressure's going up. Okay. Waller does not know the truth. All these central bankers know to do is lie, and then compound that lie, and then compound it again. You understand? They have no credibility at all, zero. Central banks are on a mission to inflate. They're going to come up with something else. We just heard the newest crisis, nuclear Armageddon. Look, I told all of you from a while back, we discussed it right here, that they're going to need to create a larger crisis to pull more cash into the now from the future. It's the nature of the beast. You know that. It's how the debt-based economic model works. It demands, it must be fueled with more debt. Henceforth, why this issue here that I've been warning about, I think before anybody, honestly, I don't know another person who's been warning about debt market issues for as long as I have, okay? I have been watching the global debt market here, I don't know how many years. It's before I even started doing this blog here, which is over 10 years ago, all right? I understand the debt market. I understand the derivative market, I think very, very intensely. And that's the key to this entire thing. And again, look, when we're talking about things like debt, or we're talking about dollars, which are also units of debt, you're never ever looking at it at face value. You have to think about the layers and layers of derivatives that lie underneath it. What is a derivative? A derivative is something that derives value from another asset. Very, very simple to understand, okay? Understanding that, I've explained since forever that the stock market itself is a derivative as to action in the debt market. You've been watching the 10-year yield. You've been watching the US dollar. You've been following the MMRI, Mannarino Market Risk Indicator, free to you and everybody. Link in the description of this video. You see how it works here. And as I have been explaining, these incredible gyrations that we've been seeing in the debt market are clear signs to me, but not Fed President Waller, that the debt market is unstable. The debt market is illiquid. And if you were to, again, look at the layers of derivatives that lay underneath, and that's another thing too. When you look at a derivative, there isn't just one. Let's say you're looking at an underlying asset, whatever it might be, crude oil. Let's just take crude oil. All right, then you have all of these side bets known as derivatives. Now, each derivative can have a derivative, and those derivatives can have a derivative, and that several derivatives can have another derivative and another derivative and another derivative. There's layers and layers and layers of them. So off of one single asset, you can have multiple layers of derivatives. And this is an issue here. And this is, again, why people have no idea, and even me, how nobody has any idea of the depth of this, how big it actually is. There's no way to actually quantify it. It's impossible to do. And I think that's a threat to the financial system as well. Does there need to be some kind of regulation there? I don't know. I mean, that remains to be seen. But when you have a situation like that, where there is one single underlying asset and multiple derivatives off of that, where no one knows actually where it goes, that's a problem in my view. And it goes back to understanding how the financial system actually works. In that, we have a fractional reserve system, meaning that everything works off of leverage, multiple layers of leverage, and that again is another problem, and that goes back to debt. Every single unit of debt at face value, even a dollar, there are derivatives of the dollar, derivatives of euros, derivatives of all this stuff. It's just so expansive. It's very, very difficult to get your head around. But look, all that, I know it's confusing. It's even confusing to me too. But understanding some of this is interesting. So I want to hear from you. What do you think about this fifth wave theory from the World Bank? It sounds pretty real to me. All right, now debt levels becoming unsustainable. We've heard that for a very, very long time. But what the World Bank is saying, that they are seeing the system kind of come apart here. And I've actually used it's coming apart in several titles in videos recently. It is coming apart, and it should be obvious. But central banks right now are at least trying to keep it together long enough till they can fulfill their end game. That is to own it all, be the lenders and buyers of last resort here before they allow the full-on implosion of the system. And the full-on implosion of the system is a mathematical certainty. Don't listen to Greg Mannarino. You can listen to the IMF. You can listen to the World Bank, multi-billionaire investors here who are saying the same thing here. But again, not according to the Fed. We're just doing fine. I don't think you trust the Federal Reserve. I think most of you would agree with Greg Mannarino here that the Federal Reserve and central banks in aggregate, they're public enemy number one. They have their own interest in mind. They don't care about you, me, or anyone else. It's pretty obvious to me, at least. All right, look, kind of a long video here. So what are we going to do moving into next week? The bond market is closed tomorrow. Okay. We'll see how that affects the stock market. Bank earnings are coming in this week. That potentially could move this market here. Now, let's put a hypothetical situation together. If we see some kind of stabilization in the bond market, okay, bond yields aren't selling off. Remember, it's not really so much the number. When you're looking at the 10-year yield here, it's not really what that number is. It's the pace at how it's getting there, and it's also these massive gyrations which are rattling the market. This is not supposed to happen. The debt market's supposed to be stable. Stability in the debt market creates stability in the equity market. If there's one thing that the equity or the stock market hates, is instability. Okay? It wants to see a stable market. It wants to be reassured everything is fine. If that were the case, if, for example, we see global bond yields stabilize, no real gyrations here, no quick moves to the upside, and if the lovely dollar wants to play, the phenomenon here of the dollar has been pretty epic. This knee-jerk higher because of fear. Fear because of what? Fear of the dark? No. Fear of instability here in the debt market. You know, talking about dark, the IMF gave us a pretty stark warning, okay? It warns of a darkening global economy. This is new as well. Darkening like a new dark age, new dark ages. You know, people, anything is possible here. So I was just writing some things down as I usually do. 10-year yield just under 3.9 here. Let's keep our eyes on that. The Dixie, or the relative strength of the dollar, we got to keep our eyes on that. As I said, bond market closed tomorrow. It's pretty incredible. Watch this run up in crude oil. All right, this is something, I actually put a star next to that. I don't know if you can see I put a star. Watch for this run up in crude. I don't think we're done. I think $100 a barrel of crude is already, it's written in stone, and it's probably going much, much higher than that. Here's another thing I wanted to bring to your attention before I let you go. Getting really long this video. I'm sorry about that. But the consumer appears to be maxed out. I mean, look, they're done. They've been borrowing beyond their eyeballs. And there are signs now that people just can't borrow anymore, and that's a problem. That means what we're going to start to see is more people falling into the lower rung of society, as I warned you and I spoke about, would happen at a faster pace moving forward. That's the goal. Make more people dependent on the beast system. You understand? Dependent on the government, which is really dependent on central banks. You understand? This phenomenon is actually playing out 100% like you and I have outlined right here from a long time ago. People, I do apologize for the length of this video, kind of long, but I think I covered a lot of important things. And please, I want to hear from you. Like I said, comment here. What do you think about what I covered? Does it make sense to you? What do you think about what the World Bank said over here? Kind of interesting, this fifth wave of debt crisis. In every prior wave, we've had 4, has led to a financial crisis. And we're obviously marching to the biggest financial crisis the world had ever seen. Like people have no idea. And I know you get it. And you're ready. You're prepared for it mentally, spiritually, physically. You're betting against the debt, becoming your own central bank, this whole thing. And I'd like to think that we got it together, you and I. All right. Love you a lot. Please share the video, and I will see you in the morning.